Hello everyone and welcome to Fun with Fitzy. Today's video is Chapter 13 Video 3. So let's take a look at the second example where there is an investment of assets in a partnership. So in this case, the new partner pays cash, but the cash goes into the partnership. And in some cases, the amount of cash they pay for doesn't always go into their capital account. Sometimes they may pay more cash than they get in capital in return. And that would be a bonus to the new partners. And so their capital accounts would go up. And sometimes they pay less cash than they're going to get in their capital accounts. And that would be a bonus to the new partner. So it doesn't always seem fair. Why wouldn't you put $100,000 into a partnership and get $100,000 in capital? Well, in this case, sometimes you might be joining the partnership and wanting to join the partnership because it's going to be advantageous to you, so you're willing to pay more than the capital balance you're going to get. Or in some cases, you have some skills or talent that the existing partners want from you, and they're willing to give you more capital than you're paying or investing into the partnership. In that case, it's going to be a bonus to you. So let's take a look at a couple of these situations. We'll do a basic one first. But before we do that, let's take a look at the steps. When a partner is added by investment, so remember the last thing we looked at was they purchased an interest. Now we're buying an investment. They're purchasing an investment, or they're making an investment in the partnership. Both net assets and the capital change, because assets are going to go up because cash is going to go into the partnership. When the new partner's investment differs from the capital equity acquired, so they're going to put in $10,000 and they're going to get something different in their capital account, the difference is considered a bonus, and we just talked about that. So either the old partners are getting a bonus or the new partners are getting a bonus. So let's do a basic example first. Okay, here's our second example, admission by investment. So what we're going to do here, same partners here, assume on November 1st, Alla invested, keyword, invested $40,000 of cash into the partnership. So we know that cash is going into the partnership. In the last example, Alla purchased an investment, so the money wasn't going into the partnership. Okay, and in return, she's going to get a 1/3 capital interest. And at the time, each partner has a $40,000 capital balance. So what is the journal entry here? Well, the one thing we do know for sure is cash is going to go up. Cash is $40,000 because Alla invested it into the partnership. But before we go on any further, let's take a look at the capital accounts and what's going to happen. So we have Aditya, and we have Ziad, and we have Alla. So currently, each partner has $40,000, and Alla has nothing because she's just joining. And what she's going to do is she's investing $40,000, and she's going to get 1/3 of capital. So the first thing we need to do is determine how much capital is going to be in the partnership, and determine how much of that she's going to get. So there already is $80,000 of capital in this partnership, and Alla is investing $40,000 more. So if you get the total of that, it's $120,000. And she's going to get 1/3 of 120. So 120,000 divided by 3 is $40,000. So her 1/3 should be $40,000. So we want her balance to be $40,000. And it just so happens that she's investing $40,000. So in this particular case, there's no bonus. She's getting what she invested. So all we're going to do here is credit her capital account, because Aditya and Ziad's capital will not change. Okay, so that example that we just went through had no bonus to the new partner or the existing partners. So let's take a look at the procedure that we're going to follow if there's a bonus to the old partners, so the existing partners of the partnership. There's a little bit of a 4-step process. I encourage you to write this down, or at least the words that are in red here. Number 1, you're going to determine the total capital of the new partnership. So you always need to know what the new capital balance will be in the partnership. And then you're going to determine the new partner's capital credit by multiplying the total capital of the new partnership by the new partner's interest. So in the particular case we just did, Alla was getting 1/3 of the capital. So we took 1/3 of that 120 to figure it out. And in that particular case, it just happened to equal the $40,000 that she was putting in. So there was no bonus. But in the case that there is a bonus, where she's putting in more money into the partnership than she's going to get in her capital, we have to determine the amount of the bonus by subtracting the new partner's capital credit from the new partner's investment. So if she's putting in $50,000, but she's only going to get $40,000 as a credit to her capital account, then there's a $10,000 bonus. And that bonus needs to be given to the old partners. And how do we do that? We're going to allocate that bonus on the basis of their income ratios. So let's take a look at an example. And this example is going to go step by step through that 4-step process we just talked about. Okay, so we have Katie, Julie, and Kamala, and they have a partnership. And they have an income ratio of 3, 1, 2, respectively. And remember when I told you about this, when there's a ratio like this, you add them all up. So 3 plus 1 is 4, plus 2 is 6. So Katie has 3, 6, Julie has 1, 6, and Kamala has 2, 6 at this point in time. So that's their income sharing ratio. Now there's going to be a $50,000 balance in each capital account. So far, Katie has 50, Julie has 50, and Kamala has 50 for a total of $150,000. Now they're adding Ziad for a cash investment. Remember the keyword investment, so you know the cash is going into the partnership, of $40,000 for a 15% ownership on July 3rd, my birthday. So step 1, remember, we're going to determine the capital of the new partnership. It's pretty straightforward. Like I said, there was 50 times 3 because Julie, Katie, and Kamala each had $50,000, was 150, plus the 40 that Ziad is adding, is now the partnership is going to have a total of $190,000 in capital. Now, the question is, how much of that is going to go to Ziad, the new partner? Well, if you look at it, up here it was a 15% ownership. So 15% of 190 is $28,005. So Ziad should get $28,005. Now, the problem is he's putting in $40,000. So he's not getting the full $40,000 out of it. So this is a bonus to the new partner. So the old partners. How much are they going to get each? Well, let's figure out. $40,000 is what he put in, minus the $28,500 he's going to get as a capital balance. So there's $11,500 sitting here that we need to split between the 3 existing partners. And we're going to do that based on their income sharing ratio. Remember, it was 3 to 1 to 2. So let's do that now. Step 4, allocate the bonus to the old partners based on the ratio. So Katie is going to get 3, 6. Julie's going to get 1, 6, and Kamala's going to get 2, 6. So Katie is going to get 3, 6 of the 11,500, and it's going to give her $5,750. And we'll do the same for Julie, and the same for Kamala. And that's how much we're going to credit their capital balances by. Because money has gone into the partnership, and we're going to allocate it to the partners. So we need to do a journal entry, of course, in order to record this. This is accounting after all. So the journal entry, for sure we know one thing. On July 3rd, cash went up by $40,000. That's what Ziad put into the partnership. And we also know now how much we're going to credit each of their capital balances. So Katie, we're going to credit $5,750, Julie and Kamala the same, and Ziad is going to get the $28,500 that we calculated. So that's the journal entry, and if you were to post this journal entry, this would add to Katie's current capital. So she's going to end up with, I believe she had $50,000 to begin with. So she's going to end up with $55,750. Julie's going to end up with $51,917, and Kamala's going to have $53,833. So that's pretty straightforward. Now let's take a look at the same scenario. However, the bonus is going to go to the new partner.